So what is the real price prediction for Bitcoin in 2026? You know, it's probably one of the biggest questions in finance right now. In this explainer, we're going to forget the hype, forget the fear, and just go straight to the data to find a realistic answer.
I mean, are we talking about a crash all the way down to $75,000 or a rocket ship past $225,000? Believe it or not, these are the actual predictions being thrown around by market experts today. And yeah, they could not be more different. Just let that sink in for a second. A 200% difference. That's an absolutely massive range of possibilities. And it really captures the insane uncertainty that investors are feeling right now. It's a huge sign that the market is at some kind of major turning point.
And that's exactly why we're here. We are going to cut through all that noise. We'll look at the bull case, we'll look at the bear case, and the powerful forces behind each one to give you the most realistic outlook we possibly can for the year ahead.
Okay, so to figure out where we're going, we first have to understand just how wild the ride has been lately. Seriously, in just the past few months, we've seen a price swing so massive it pretty much sets the stage for everything we're seeing today.
Let's start at the top. Just a few months back, in October of 2025, Bitcoin absolutely surged to a brand new all-time high, touching over $126,000. The market was completely euphoric. It really felt like the sky was the limit.
But then, just as fast as it went up, the floor completely fell out. By December, the price had plummeted 37%, crashing all the way down to $80,000. That is a $46,000 drop in just 2 months. This is the kind of volatility that's the backdrop for our entire conversation today.
So, with all that chaos fresh in our minds, how could anyone possibly predict a price over $200,000? Well, the bulls have a very powerful and actually very simple answer: institutional money.
And they are not shy about it either. Just look at this prediction from Tom Lee of Fundstrat. He's a very respected voice on Wall Street. He's calling for $250,000. Now, that isn't just optimism, that's some serious confidence. And it's pretty much all based on one key trend. And here it is. What's so amazing about this is the sheer scale of the money flowing in. In just the first 2 weeks of January 2026, Bitcoin ETFs, those are just investment funds you can buy on a regular stock exchange, pulled in over $1.7 billion. You see, this isn't just everyday investors gambling. This is big, institutional capital making a strategic, long-term move into Bitcoin. And this just shows you the intensity. BlackRock, literally the world's largest asset manager, saw its Bitcoin ETF pull in a staggering $648 million in a single day. When institutions this big decide to buy something, they don't just dip a toe in the water, they make massive waves.
So here's the crucial point. These ETFs now hold over 600,000 Bitcoin. That's 3% of the total supply, just locked up by long-term holders. The bull argument is that this isn't just buying pressure. It's a fundamental shift. It's creating a massive supply shock as this more durable capital enters the market and stays there.
Okay, that bull case sounds pretty darn strong, but let's not get carried away just yet. The bears, well, they're looking at the exact same market, and they're seeing an absolute minefield of macroeconomic risks that could bring the whole thing crashing down. And the list of worries is, well, it's long. The stock market is near all-time highs, and a lot of people think it looks overvalued. We've got geopolitical tensions rising. There are serious fears that the massive investment pouring into AI could be a bubble that's ready to pop. And on top of all that, the Federal Reserve has paused interest rate cuts, which could make risky assets like Bitcoin a whole lot less attractive.
And beyond all those external risks, there's another danger lurking right inside the crypto market itself: forced liquidations. This is when traders who are using borrowed money, leverage, get their positions automatically sold off when the price drops. It creates this terrifying domino effect, turning a small dip into a full-blown crash.
And this isn't just some theory, you know. During that recent crash from $126,000, over $700 million in these leveraged positions were liquidated, just wiped out. That kind of event creates panic, and it can really scare away new money from coming into the market. Okay, so on one hand, we have an unstoppable force of institutional buying. On the other, we have a wall of macroeconomic fear. Where in the world does that leave us? Let's try to put these two arguments together and find a realistic middle ground. So we started with that wild hype range, from 75 all the way up to 225,000. A much more realistic, data-driven range for 2026 is probably somewhere between $90,000 and $140,000.
This takes into account the strong support from the ETFs, which should prevent a total collapse. But it also respects the fact that a crazy move to over 200,000 just isn't supported by the current inflow rate.
So what's going to determine whether we hit the low or high end of that range? These are the 5 key factors you absolutely have to watch. Number 1 is ETF flows. Are they staying strong? Then there's Federal Reserve policy. Will they cut rates or not? Regulatory clarity. Will new laws encourage more big players to jump in? Geopolitics, of course. And finally, the lingering effects of the last halving cycle, which, as you know, is when the reward for mining new Bitcoin gets cut in half, and that has historically led to price increases. These 5 things will tell the whole story of 2026.
All right, knowing the prediction is one thing, but knowing how to actually act on it is what really matters. So let's translate all this analysis into a simple playbook for navigating the year ahead.
These 5 rules are absolutely crucial. 1. Please don't go all in chasing some moonshot. 2. Expect volatility and don't panic sell. Remember, the institutions are buying those dips. 3. Dollar cost averaging is your best friend. Just invest a fixed amount on a regular basis. 4. Be honest with yourself about what kind of drop you can actually handle. And 5. Diversify. Don't let Bitcoin be your only bet.
So let's pull back for a second and look at the big picture. What does all of this really mean for Bitcoin's future? Well, it signals a really profound shift in the very nature of this asset.
Here's a potential roadmap. In the short term, a test of that $100,000 to $120,000 range seems pretty likely. Then we could see a period of consolidation for a lot of the year, just building a strong base. And looking further out, a move towards 150 to 180 by 2027 or 2028 seems like a realistic long-term target if institutional adoption continues.
And this, right here, is the single most important takeaway from all of this. The days of 10x gains in a single year, they're probably over. With big institutions in the game, Bitcoin is maturing. It's becoming a more stable, more legitimate part of the global financial system. And that probably means slower growth, but it also means a much, much stronger foundation.
So after looking at all the evidence, the bull case, the bear case, the whole shebang, the final question really is for you. Where do you think the price is headed? Are you a bull or a bear for 2026? Let me know what you think.